What is the dollar milkshake theory, and how does it explain the strengthening of the U.S. dollar? The dollar milkshake theory, proposed by Brent Johnson, explains why the U.S. dollar appreciates during global economic turmoil. By emphasizing the dollar's safe haven status, the theory explains why investors flock to this currency in times of crisis. This model, which has attracted attention in the financial world, offers an effective perspective for understanding the rise of the dollar, especially during periods of heightened global uncertainty. The milkshake analogy in the theory's name is a striking description of the flow of global liquidity. Johnson compares the world economy to a milkshake glass. The U.S. dollar is the milk, other currencies are the chocolate syrup, and global liquidity is the ice cream. When economic crises or uncertainties stir this glass, capital and liquidity from weaker economies flows toward the U.S., just as a milkshake is drawn through a straw. This movement causes the dollar to appreciate against other currencies. The U.S.'s deep and liquid bond market is one of the key drivers of the dollar's appeal. In times of risk, investors seek a safe haven in U.S. government bonds and the dollar. But this has a profound impact not only on exchange rates, but also on global markets. For example, since oil, gold, and other commodities are usually priced in dollars, a stronger dollar depresses the prices of these assets. This could create economic difficulties for countries dependent on commodity exports. The rise of the dollar also has complex consequences for the U.S. economy. A strong dollar could make American goods more expensive in international markets, making exports more difficult. This could cause fluctuations in global trade balances. The dollar milkshake theory has attracted attention for accurately predicting the rise in the value of the dollar, especially during the events of recent years, such as the COVID-19 pandemic or the Russia-Ukraine conflict. However, the theory is also subject to some criticism. Some experts argue that the theory oversimplifies the global economy and presents a dollar-only perspective. Factors such as central bank interest rate policies, geopolitical developments, or the rise of alternative reserve currencies also affect foreign exchange markets and may fall outside the scope of the theory. Nevertheless, the dollar milkshake theory offers a powerful analytical insight for investors and analysts. When evaluating exchange rates, commodity prices, or international trade strategies, this theory can serve as a guide to understand the possible effects of the dollar's rise. Today, global dynamics such as rising inflation, debt crises, and political uncertainties contribute to keeping the theory relevant. Those who follow financial markets can use this framework to better interpret the dollar's movements and make informed decisions.